Hi everyone, welcome back to this series of videos on Ind AS, that is Ind AS with Accountsman. So in the previous lecture we were discussing Ind AS 38 and part 1 of Ind AS 38 was done in the previous session. So today we'll continue Ind AS 38 from where we left in the previous session. So in the previous session we discussed what exactly is intangible asset, the meaning of intangible asset under Ind AS 38, examples for the same, and we also discussed the items that are excluded from Ind AS 38 purview, and we discussed whether software is an intangible asset or not and whatnot. We discussed accounting treatment, when do we treat it as an expense, when do we treat it as an asset, and everything. When to recognize was done. So today's discussion is the extension of this when to recognize. So regarding when to recognize an intangible asset, I told the intangible asset can be recognized depending upon the following scenarios. Number one, whether that intangible asset is acquired or whether that is internally generated. Further, with regard to acquisition of an intangible asset, I further told you we have to check further whether it is acquired separately or is it acquired as a part of a combination. And after that, in the separate acquisition, we discussed it can be acquired for cash, whether is it separately acquired for exchange of another asset, that is non-cash consideration, or is it part of a government grant. So we'll discuss each of these cases in detail right now. So the first thing for our today's discussion will be with regard to cash. So right now I'm going to discuss an intangible asset acquired separately for cash. Intangible asset acquired separately for cash. So that is our first discussion. Come on, without wasting much time, let's get into business. So when an intangible asset is acquired separately for cash, such an asset has to be recognized at its cost. Such an asset has to be recognized at its cost. Now the question is, what exactly do we mean by this term cost? Come on, this cost will include purchase price. Purchase price incurred against this specific asset. And further, it will also include duties and taxes. Duties and taxes. But it has to be very carefully noted that whenever we mention duties and taxes, such duty or taxes which is playing part of the cost should be such amount of duty or such amount of tax which is not refundable. Non-refundable. What if such duty or tax is refundable? If a duty or tax is refundable, such refundable duties or taxes are not at all part of the cost. You would receive it. In fact, it is somewhere like reimbursement. Meaning, whenever I'm telling non-refundable, I'm trying to tell input tax credit not available. If input tax credit is not available, then such duty or tax paid against such intangible asset can be included in the cost of such intangible asset. Then the last inclusion is directly attributable costs. Yes, we've discussed similar kind of a definition when it came down to PPE, Ind AS 16, as well as inventories under Ind AS 2. So basically, the cost of an intangible asset acquired separately for cash will include its purchase price, duties and taxes which are non-refundable, meaning ITC not available, and directly attributable cost till asset is ready for intended use. Till the time the asset is ready for intended use, any directly attributable expenses incurred will be part of the cost. If I have to give you a few examples, something like engineering cost, or even if it is employee cost, or something relating to trial run, if you are doing any trial or test run, such cost is also something which you can include in the cost. Now I've told you what are included in the cost. Now it's high time that I have to tell you what are the items which are excluded from the cost. Come on, let me write exclusions from cost. What are the items which are excluded from the cost? First and foremost things, refundable duties and taxes. If there is any duty or tax paid which is refundable in nature, it is more or less like a reimbursement or input tax credit available. If input tax credit is available against such item, such input tax credit, such tax portion cannot be included in the cost of the asset. It's something very evident. We've been discussing the same in Ind AS 2 as well as Ind AS 16. Okay, then the next one, administrative overhead. See, this administrative overhead is in the normal operations for the purpose of administration. This expense would be incurred irrespective of the fact whether such asset is bought or not, whether such asset is included or not. So administrative overhead, or if there is any general overhead, yeah, such administrative overhead or general overhead should not be included in the cost of the asset. And further, another item which should not be included is expenses incurred for setting up the location. Okay, expenses for setting up location of the item, setting up the location, or employee training cost. Yeah, if you're training the employees, such employee training cost, or if there is any advertisement expenditure that you incur which will add no value to the asset, these expenses are not to be included in the cost of this asset which has been acquired separately. So what we're done so far is we're done with an asset separately acquired. Oh god, okay, let me take black. We're done with an intangible asset acquired separately for cash. Now it's the time wherein we would have to discuss how to be recognizing an intangible asset which is acquired separately in exchange of another asset. So this is where I'll give number 2. Intangible asset acquired as an exchange. I can basically tell that whenever you acquire an intangible asset as an exchange of another asset, this is more or less like a non-monetary consideration for an asset. Yes, I hope this made sense. Come on, let's go to the discussion of this in detail now. Then there are two assets. One, asset acquired, asset given up. So there are two assets. One is the asset being acquired, another is the asset which is given up. Now, how do we treat it, or what do we give value to is the important question here. Now, this is based on the priority order. Concentrate. For recognizing asset acquired, the priority order for the asset for recognizing the asset acquired, the first priority is to be given to fair value of asset acquired. Now, if we can compute and arrive at the fair value of the asset that is acquired, you would have to recognize the intangible asset at that asset acquired. Now, that is the new intangible asset that's coming in, the new intangible asset that is acquired. Now, the interesting scenario comes wherein, no, the fair value of the asset that is coming in is not available. Then what do we do? Then the standard says that you can rely on the fair value of asset given up. You are giving up an asset, no, in return. Instead of giving cash, you are giving one other asset to get that intangible asset. Such asset which is going out, that asset's fair value can be considered as the value for recognition of that asset that is acquired. Assume this is also not available. Then what is the third priority? The last way or end resort is fair value. Oh, sorry, not fair value is no more available, isn't it? Book value of asset given up. So the priority order goes like this. The first priority is to recognize the asset at the fair value. If that first asset's fair value is not available, then we'll choose the fair value of the asset that is given up. And if that is also not available, then the third and the least priority is the book value of the asset that is given up. So this is how we recognize the asset which is taken as an exchange for another asset. And entire discussion is about the asset acquired. Remember this. This entire discussion is against the asset acquired. Now, how do we deal with respect to asset that is given up? Asset that is given up will always be recognized at what value? With regard to asset given up, it's always at book value. Yes, asset given up is always at book value. You would have to record it at book value. The outflow is at book value. Any difference will lead to profit or loss, which has to be measured separately. And in few terms, instead of telling this as book value, you can instead call this asset as carrying amount also. Oh, not cost, carrying amount. By book value we mean the carrying amount. By this, what we've done is we have successfully completed this exchange part also. Now we would have to discuss the third part, that is when an intangible asset is acquired separately, but against that asset there is government grant received. Now regarding this, I don't want to discuss anything in separate. Okay, fine, I'll write it in a separate sheet, but let me tell that you that would not be discussed in detail here. You know why? Because it's already discussed in detail. Intangible asset acquired against government grant. Now whenever there is government grant received against a specific intangible asset, you guys have to remember that there's a bulb that should glow here which says that in days 20 May we've already discussed government grant. Government grant, when it is received against a non-depreciable asset, against a depreciable asset, what are the treatments possible? Can we reduce it from the asset and then record the asset at a reduced value? Yes. Can we write that entire amount of government grant as deferred revenue item and then transfer it to the the revenue over the period of the useful life of such asset? Yes. So both are possible. Yeah, so both the ways were possible. We've discussed when is it that we would have to, how to treat when government grant exceeds the cost of the asset, how to treat when government grant is equal to cost of the asset, then the asset has to be recognized at nominal amount. So yeah, we've discussed all that in detail when we discussed government grant in days. Okay, so this discussion is basically covered in Ind AS 20 government grant. Would have to go back and then watch that video, the link to which is already provided in the description. You can go back and then watch that video for understanding of this. So we're done with the third part also. Ouch, black. Yeah, now we would have to discuss with regard to combination, how to account for whenever an intangible asset is acquired as a part of a business combination. I'll call this as number 4. Come on, let us go ahead now. Intangible asset acquired on combination. Yes, few important pointers. Whenever an intangible asset is acquired on combination, such intangible asset has to be first classified into goodwill and other intangible asset. And we can't club all the intangible assets and then write them together. We would have to segregate and then write the intangible assets, meaning recognize the intangible assets as goodwill and other than goodwill, other intangible assets separately. It's very important. You get that? And another important point is, what if the acquiree, see, we are acquirer, we are acquiring that particular organization. The acquiree, meaning that company which we are taking over. If such an organization has not recorded this intangible assets, if they have not recognized this intangible assets, can I give that as a reason why I should not be recording these intangible assets in my books? The answer is no. See, they have not recognized it separately, their fate, they're bad. I don't really care why have they done it or why haven't they done it. Irrespective of the fact whether the acquiree has recorded or recognized this intangible assets separately or not, we would still have to recognize this intangible assets separately. A very important point. Okay, let me read this. Irrespective of the fact whether acquiree, who is acquiree? Acquiree is that company which we are acquiring. They are giving their business. Acquiree, we are taking their business. We are acquirer. Yeah, irrespective of the fact whether acquiree has recognized intangible assets separately or not. We means acquirer has to recognize intangible assets separately. See, sometimes what really happens is, to that business, it is an internally generated asset. To us, when we buy, it will become a purchased asset. Internally generated assets will not be recorded. Conservatism. It is not identifiable, no contractual rights, no separate, no non-monetary item. I will discuss that. I'll discuss. See, we have it separately, internally generated. I have it separately. I'll discuss this. Okay. To such organization, it might be internally generated asset. To us, it's an acquired asset for us. So we would have to record it separately. We will have to recognize it separately. So I'm trying to tell you once again, acquirer has to record and recognize each intangible asset separately. And the reason why not to recognize cannot be the fact that the acquiree is not recorded. You get that? And last important point is, if there is sufficient information, if information is available, then recognition at fair value. If there is sufficient information available, we'll recognize that individual asset at its fair value. You get that? So by this, and in fact, the detailed discussion is done in a separate standard. We have a business combination standard. We'll discuss it there. Yeah. So by this, I am done with combination part. Yeah. Couple of important points. One, they have recognized or not, we will recognize it separately, because to them it is internally generated, to us it is acquired asset. You get that? And a goodwill and then other intangible assets has to be recognized separately. We can't club them. That's with respect to combination. Now let us get into internally generated assets. So I'll call this number 5, goodwill, and other than goodwill, let's call it 6. So what is it? Goodwill internally generated. So very easy point to be discussed, should not be recognized. It should not be recognized. Why? The reason is pretty simple. I can straight away tell conservatism, but we would have to check another reason. Okay, the reason is definition criteria. So what does the definition criteria say? You guys can come back and then see intangible asset definition. It says that it's a resource controlled by an entity arising from past events giving future economic benefit. So it has to fulfill all of these conditions. Further, this is the definition of an asset. To call it intangible, it should be there should be separate identity, it should be non-monetary item, and it should have no physical substance. With respect to an intangible asset like goodwill, which is internally generated, it is a resource. It is controlled by the entity arising from past event giving future economic benefit. It is an asset, no doubt, but it is not intangible because it has no separate identity, it has no contractual rights, and it cannot be measured in terms of money. You get that? So see, there is some goodwill that have generated internally. It cannot be measured in terms of money, guys. You get that? So that's a point that can be very valid, which says that we cannot recognize an internally generated goodwill in books of accounts. So let me come back and then write here. So what did I tell you? Reason is definition criteria. What is it? So the pointers are not separately identifiable. It is not separately identifiable. Second one is there is no contractual rights against it, or you can say contractual or legal rights, saying that it belongs only to me. So as this is basically not there, we cannot recognize an goodwill which is internally generated in an organization. Next, this takes us to the discussion with regard to, okay, we're done with fifth one. Now, what about other intangible assets? I mean to say there is an intangible assets other than goodwill and it is generated internally. Can I recognize the same? That's the last part of our discussion with regard to recognition, which I'm going to discuss. Interesting discussion. Have a look. Sixth one. Other intangible assets. This is other than goodwill. Internally generated. So we have internally generated an intangible asset which is not goodwill. How do we recognize such an item? Can we recognize it in the books of accounts? If when, if yes, when, if not when, that's the discussion. Okay. Now, can we is the question? Yes. Should we is the question? The answer is it can be, but it should not, like, it's not like must be. Okay. This basically depends upon definition criteria again. This basically depends upon the definition criteria all again. Let us see what exactly to discuss in the definition criteria. First pointer, I told it should be a resource. It should be a resource. It's a resource. Second one, it should be controlled by entity. This is nth time that we're discussing the definition of an asset. I hope you guys are very clear with this point by now. And the next one, arising from past event. It should be arising from the past event. And next one, giving future economic benefit. Okay. There are further three more conditions basically. We say not tangible. It should be not tangible. That will be fulfilled because I've told intangible asset only. Second one, non-monetary. And third one, it should be separate identity. Yeah, usually intangible asset other than goodwill will have separate identity, non-monetary, and then non-tangible. These are usually fulfilled. But I'll tell you the tricky parts or the points which have like some trick in them is basically these areas. One wherein we say that it is giving future economic benefit. This is one trick area. And the next one is when I say separate identity. See, to a certain extent, they'll not have separate identity. They get that identity at a separate stage. So this is the problem area which is actually a little difficult to identify. Not easy to identify. Problem area. Difficult to identify or difficult to understand. Yeah. See, in the question, they will not tell that this asset will give future economic benefit, or they will not tell there is separate identity. The problem is, whenever you say future economic benefit, like you should be able to tell it in terms of money, isn't it? Yeah. And then you say separate identity, when you're building an intangible asset, to one extent, it doesn't have separate identity. After an extent, it becomes separately identifiable. So this is a difficult area to understand. Now, how do we crack this? So there is simple thing. Standard has told very easily, okay, beta, whenever you have difficulty in identifying the future economic benefit of an intangible asset, or whether an intangible asset has separate identity or not, go back to R and D. Check whether this particular intangible asset is in the research stage, or check whether this particular intangible asset is in development stage. Depending upon the stage where it is, you can easily tell whether that asset is separate identity or not. Now, what exactly is research stage? What exactly is development stage? Research stage is an investigation to gain knowledge. Now, when I do a lot of search to get knowledge, it is research stage. When I start applying the knowledge what I've gained in the research stage, it is called as development stage. When an intangible asset is in the research phase, such item is not separately identifiable. Entire expenditure is to be expensed. When an item is in the development stage, sir, can I recognize intangible asset? No. Then you would have to check further conditions. Yeah, on fulfillment of all of those conditions, you can recognize it as intangible asset. If not, even if the asset is at development stage, you can still treat it as expense only. You get that? Come on, let me discuss that in detail now. Okay, an item is considered to be at the research stage. Okay, what do you mean by research stage? Investigation to acquire knowledge. What do you mean by development stage? Application of knowledge acquired. Whenever an item is at research stage, then what do we do? If intangible asset is in research stage, it is to be expensed. Meaning straight away you take it to P&L account. You get that? You will not try to capitalize it only. Whenever an intangible asset is at development stage, then okay, if Can I write as IA for intangible asset? Is at development stage. Then ask these questions. Then you would have to further ask yourself few of these questions. Okay, if the answer to all the questions is yes, then we can go ahead and then capitalize it. If not, then again we treat it as an expense. You get that? So now what are those questions? Come on, let's see it in the next slide. What are the questions that you should ask? Question number 1. Intention to complete. You should ask the organization, do you guys have an intention to complete this development stage, to complete this intangible asset? If the answer is yes, then you would have to check if there is adequate resources. Check if there is adequate resources to complete building of that intangible asset. Okay, they have an intention to complete. Yes, they have adequate resources like time, adequate resources with respect to any other property. But is there a technical feasibility? Technically, is it very something which is remotely possible or highly impossible kind of thing? So we'd have to check the technical feasibility. Again, when we talk about technical feasibility, it is professional judgment, guys. There is nothing like technical feasibility 100%. Technical feasibility will be like 80%, maybe, may not be. It's very descriptive kind of a thing. So such a scenario, you need to use your professional skills, judge, and then tell yes, technical feasibility, yes or no, is based on your professional judgment. Okay. Once the technical feasibility is being done, you would have to check, is there an ability to use or sell, ouch, I'll write it neatly, to use or sell intangible asset. Now, okay, fine, you have intention to complete, there is adequate resources also, technically also it's possible, but once you make it, is it a useless product? Is there an ability to use it in-house, or can you sell it to, and can you sell that intangible asset to someone? That's the question. Only if there is yes to that, then you can think of recognizing it as an intangible asset. Further, you would have to check the usefulness of intangible asset. Several times the intangible assets on isolation might not be useful. You would have to check, or what to say, output of intangible asset. So either the intangible assets or the outputs of the intangible assets should be of some use. Only when they are of some use, you can recognize them as basically an intangible asset. If not, though you develop it, it's of no use. What is the point in recognizing it as an asset? Because see, all these questions come because we're basically thinking about what? Future economic benefit. See, at the end of the day, it falls back to giving future economic benefit, isn't it? If an item cannot give future economic benefit, it doesn't fulfill the criteria of asset only. Leave intangibility, it is not at all an asset. So we'd have to check that primary condition. I hope that makes sense. And after all this, the last question is, we would have to check the ability to recognize expense, because if we can't measure anything in terms of money, we cannot write it in books of accounts. Money measurement concept is something that people will read at CPT or CA foundation all by itself. If it cannot be measured in terms of money, it cannot be recorded in books of accounts. So ability to recognize the expense relating to output. You should know how much expense is going in to come out with that intangible asset. If you cannot recognize that expense, though it is an intangible asset, you cannot write. Why? Because the value will be zero. Yeah. So that's a very primary condition or primary question that you guys have to ask the organization. Is there an ability to recognize the expense relating to this? And in these expenses, there are certain things which are not included. Okay, exclusions, administrative overhead and general overhead, or if there is any duties and taxes which are refundable. Yeah, employee training cost. Yeah, cost of new place, or if there is any huge advertisement, expenses, Yeah, all these expenses are not to be included in this cost also. You guys get that? So if an asset is at development stage, then what do? Then we ask these questions. If the answer is yes to all these questions, yeah, if an intangible asset at development stage has yes as answer to all the, how many questions? 6 questions, then it can be recognized as an asset. You guys get that? So if it is internally generated goodwill, then not to be recognized. If it is internally generated asset other than goodwill, then we'd have to check whether it is at the research stage or development stage. If the asset is at research stage, expense, not to be treated as an asset. If the item is at development stage, then we would have to ask these 6 questions. What are the 6 questions? Whether there is intention to complete, adequate resources to complete, is there technical feasibility, is there ability to use or sell that intangible asset, or is there usefulness of the intangible asset or the output of intangible asset. Lastly, do we have the ability to recognize the expense required for the purpose of output? If the answer is yes to all of these questions, then that intangible asset will be recognized as an asset. If not, even though the asset is at development stage, it will still not be recognized as an intangible asset. You get that? So that is the answer to this. And by this, I have successfully made you run through this part as well. So we're finally done when to recognize an intangible asset and what value, when to take fair value, when to take the original cost and everything. But our intangible asset standards is not done. We have to further discuss the next part of the standard, which deals with the measurement. When do we revalue? How to amortize? What do we mean by useful life? Is there a possibility of upward revaluation? Is there a possibility of downward revaluation? What do we call retirement of an intangible asset? So all this, yeah. So that would be the last part on our Ind AS 38, that is intangible asset. See you all in that one. So till then, if you have missed any of the standards, you can go back and then watch them. I've dropped the link to all the past videos on Ind AS in the description. So hoping that I made little difference in your preparation for your CE final or semi-final examinations. I'll wait to see you in the next one. Till then, stay in the game. Bye bye.